day, all. Ira Epstein with your metals market wrap-up for this Thursday, the 20th of February, 2020, and we're just getting on to the 2:40 time frame. That is Central Time. So a good, strong close. These will be in the areas where you close in the gold and the silver. Certainly the gold market, very nice, strong close. Getting a bit of profit taking in platinum. You'll see other markets. Part of the reason happens to do with Huabi, which is the province where Wuhan is. I wish I spoke Chinese better, but those are the province. And the government came out today and told workers in those areas that work in the factories to not return to the factories in that province until March 11th. Now, today's the 20th of February, so it's over 2 weeks away. So they did something else in China that I think the market's bothered by. They're going to change the method of reporting, second time in maybe a week and a half, or how they're going to report how many cases they have. That's not good. It means that we don't have a baseline to work from. We're just relying on whatever they're telling us, and who knows where that's going to go. But the gold rallied on it. The silver did in part. The dollar up. Most other currencies down. The stock market, when this news was coming out, gradually took a hit on it. I can't tell you that that was the exact piece, but I was watching the market, and it seems that news was coming out close to that time that this market broke. But I was impressed, and I am impressed, how the market and stocks continues to hold together. And I wrote in my morning newsletter, remember I write 2 a day, I wrote and said, you know, it's a testament to the strength of the stock market that this market just doesn't go down and come apart, as this market's able to absorb and look over the horizon as to this disease, hoping that, sometime in the second quarter, things get better. But when you look at the gold market, this will be the highest close in years. You're sitting here at the 1619 level, very powerful. Looks good on the chart here. This was the old, what I call missile day. That was when Iran sent into Iraq at the U.S. forces its missiles, and this is the first successful challenge of that. That's good. Number 2, you've got the trend up. Higher lows, higher highs. Number 3, your overall key moving averages, be it the 18 and the 100 day. That's good. Here's what I don't like. You now have 3 days in a row going into a Friday of being over the upper Bollinger Band. I count each successive day of over the Bollinger Band as taking away one of the percentage points of the theory. The theory that John Bollinger created was with this algorithm 95% of the time, and he's got it where he's able to prove it quantitatively. I didn't write the algorithm, he did. That the market will trade within these bands. I'm always looking to see, is the market come out of a sideways pattern, or is it just in a run? Is it getting to it? This is not what I call the ideal sideways pattern, but it is a sideways pattern. Nonetheless, I like them tighter than that, and I don't quite have it. But you have 3 days in a row. Now, Fridays have not been gold's friend for a very long time. That does not mean I'm picking a top. I'm just saying that tomorrow I think that you've got a 98% chance or so that this market is going to try to get under the upper Bollinger Band. So I wouldn't be surprised to see some profit taking, and I say it in conjunction with momentum. I am not a top picker. I think that on pullbacks, the trend is still up, but you're overbought 3 days in a row over the upper Bollinger Band. In the silver market, it's consolidating, but it's also not giving back. That news where, remember, each higher number is more ounces of silver to buy an ounce of gold. It's actually broken down from that 90 level into the 88.5 zone, and it's under the 18-day average of closes. So silver on a relative basis is looking okay against gold right here. Not bullish against it. I want to make that clear. It's stabilized. It's not losing value to it. It's also at a key number. It's at the upper Bollinger Band, and today's settlement's going to be, I think right under it. This is not the settlement price just yet. If I'm correct, it's just a little bit less than that, right at that band. You're overbought here as well. Are we trending? No, this is what I call a vertical price rise. You've got a lower low and a higher high. So this is a catch-up market that paid a lot of attention to the 100-day average of closes and then made its move higher. In the copper market, this is a market that we call Dr. Copper. It tells us what economies are doing. And obviously the focus is what's China doing. Well, we've got a couple of issues going on here. Less world production in certain areas of Africa are happening right now. And we're getting a pattern where the market got over the 18-day average and it's not trending anymore. It's got a lower low and a higher high, and momentum is overbought. It is narrowing in these Bollinger Bands. So I think it's a market now that is coiling for something. In the platinum, my theory, my own, is that the first time you hit a Bollinger Band is where I look for the pros to take some money off the table. I realize you went up yesterday, you're looking great, and you gave it all back today if you don't pay attention to those theories. Does everything I say always work? No. I'm like Swiss cheese. But if you study the principles of them, I'm going to argue nobody's gone broke taking money off the table if they're in a winning trade. You may leave money on the table, but you're rarely going broke. And I'll stay with the fact that you don't stay over the Bollinger Bands, especially if you're not in a sideways pattern, a tight one coming out of that. In the palladium, this is a race to get back underneath this number. Now, it can do it tomorrow very easily. It's an overbought market that's hit its upside target. It exceeded it by quite a bit if you look from the first time it hit it. This market was up next day, basically, because that was the day you hit it. So let's assume it's this number would have been 24.32. You went all the way up to 27.55. But as fast as you give it, you take it back. This market pulls back from those highs like nothing. And remember, it's a $24,000 margin for one contract. So it's fun to watch. I love watching it. And this was a nice tight sideways pattern that broke out. I'm still friendly this market, but it is overbought and over the upper Bollinger Band. Last, the dollar index. Notice how at the beginning of this move, it got over the Bollinger Band, then moved to the right-hand side, and that's where it's staying. What does it have? That's what we call the embedded slow stochastic reading, which occurs when the two numbers that make up the oscillator called slow stochastics convert from being overbought, which would be a reading like this, because one of the numbers, in fact, in this case, both numbers are over 70. You can see, here's the first one over it, and then you pull the other. It's just overbought. And then when they decide to convert with both going sideways for several days, and you were there, all I'm looking for is the market to pull back to the right-hand side of that band and be supported by the pros until this reading is lost. And so far, that's been very much what the market is doing. Obviously, the bias has been up since right here at the very end of January as you got over that 18-day average, and it hasn't looked back. Not one word that I've heard from President Trump on the dollar being overvalued, blaming the Fed for anything. I think he understands, or somebody's got his ear. You got a world situation here with coronavirus, and that's what's going on. Technical trading tips from the pros. This is from our good friends at Modern Trader. And if you're looking for brochures to explain maybe things you're not familiar with, they do a great job. Gann square of 9. Then we've got benefits of relative strength, money flow index. These are things that technicians like me talk about. It's our backyard talk, let's put it that way. You put it together and you try to understand concepts. That's all. Maybe it'll open up a light for you if you look at a chart. Oh, the articles will look like this. They've all got great diagrams, fabulous writing behind them, and I consider these the classics. These are not written today. These are the classics. I think you go back to the classics over and over and you read them, because while the young algo trader kids are doing what they do with the computers, you can't think that way as a human, okay? The computer's going to be quicker than you and be more consistent in what it does, right or wrong. But if you're the type that wants to understand the markets, these are the things you need, I think at least. Go to www.iraepstein.com, free offers, click on the ones you want. We'll get them via email to you. You can always call my staff while you're on the phone with them. They'll probably get it right at that time, sent to your mailbox, or you can click here, it'll get you there. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.